Okay, let's burn through this. Not a lot has changed since the last video. In fact, we are shaping up exactly like we forecast we would. Remember, we talked about what kind of shape we'd put in on this handle, and it looks like we're forming a pennant. We have a clear upward trend line, and then, of course, we have the bottom trend that's just above that 50. It's riding together. This looks really good. You see a couple of wicks here on the daily. You see declining volume. You see even the average volume is kind of rolling over here. Actually, you'd probably put it more like this. So what I'm guessing happens next is it looks like it might be kind of running out of steam, honestly. There's been, so in the previous videos, we've talked about all this talk of sanctions and stuff. And I think it's turning into kind of a buy the rumor, sell the news deal. Because if you're in here like me, you're probably an investor for the long haul. But there are plenty of people in here who are just day trading, right? There are people buying the rumor and selling the news. And so these people are going to start taking profits. And then when it kind of looks like it's running out of steam, okay? So it wouldn't surprise me to just see this pennant kind of take place. You might get something like this. And if your volume continues to kind of go like this too, then that would actually be great. Because if you get consolidation, which is what this will be in this pennant, with declining volume, the odds of this breaking up on a volume breakout are very high. Okay, so that actually is exactly what we thought we would see. And I would say that's probably what we're going to get. Okay, so how should you play this if you want to add or you don't have any at all and you want to get in? Okay, so that's easy. So assuming we get this consolidation, and I'm pretty sure we will, all you want to do is just start charting this stuff for yourself, first of all, because you don't want to get on YouTube all the time and look for people to give you all the answers. I mean, part of what I want to do here is help you do this yourself. So let's get started. Open a chart. Go to tradingview.com, sign up, and get started, right? Make the same thing here. Get the technical indicators, get the 50 EMA, get the volume, right? Get the RSI. I mean, you don't need a whole lot more than that. This is good enough. All right. And so when the price starts hitting this lower trend, that's going to be a strong buy for me. You get to touch that 50, it's even stronger. In fact, you might get a confluence of it touching together at the same time, right? And the price might do something like this. And that would be a super duper strong buy. So this is what you're looking for. And before you say, oh man, but I don't want Sprott. I want energy fuels. Well, okay. It's the same thing. Because if you pay attention, all of these things are charting together. Remember, we talked about this in the past. These things have confluence with each other. They're trading in synchronicity. And a lot of their charts look the same. So we have the strong bull channel in energy fuels. Well, we have the same thing in next gen. Okay, look at the pattern here. See this little kind of V double top? It's the same thing right here, V double top, right? Same thing here, same thing, Cameco. Cameco is a little bit bigger than the rest because of some massive call options that were taking place, but it's the same upward bull trend. So it doesn't matter what you want, okay? It doesn't matter. In fact, this is why you need to always be looking at the entire sector as a whole, because it doesn't matter which company you want. When you chart them all together, you will see that, okay, if you want energy fuels, maybe energy fuels comes all the way down to $5.22 and it hits this bottom trend line, okay? Well, maybe next gen comes down here at $4.93. So maybe energy fuels has a bigger sell-off, all right? But it hits the trend line the same time next gen hits its own trend line. Okay, and the same time Cameco maybe hits its own trend line. So you can find confluence of things, finding support at the same exact time as each other. And because you have this knowledge, you know it's a buy because you're finding strength in the market. So individually, they may sell off 10% here, 20% there, 5% there. They all find support together. Okay, and that's just how the market works a lot of the time. So I don't care what you're trading. I don't care what sector you're in. You should be doing that. So whether or not you want all these companies, even if you only want Cameco, you should be charting the whole sector, or at least the big names. Okay, and getting back to the confluence, we see these upper wicks on energy fuels, just like a Sprott starting to kind of run out of steam up here. It's hitting the wicks on these upper bounds. The same thing's happening across the board. Okay, you're getting long upper wicks at the same zone. right? These equities just don't want to go higher, at least not yet, not right now. And so when you see this confluence across the board, it helps you make educated decisions. Because yes, this may break up tomorrow, and I might have to come back and say, oh, it broke out and it went higher. But I'm just not seeing it. It makes more sense that the day traders and swing traders take profits, and it kind of just starts consolidating for a little bit, building strength to move higher. I mean, you see these upper wicks. It just seems kind of clear to me that we might just trade sideways. You don't have to sell down. You can trade just like this, right? You could trade just like this, and that would be awesome. You would hope to see that, actually, because first of all, it's bullish, and it would give you time to just cool off and prepare for that next run up and go to work and cash in a check and get some more money to add in here and buy on the bottom. And look, try to keep things in perspective, because since the end of January, we're talking about 2 months basically, these equities have seen a 91% run. Okay, so it makes sense for them just to cool off for a little bit, all right? So just all things in perspective. And look at Cameco. I feel like this is important because I'm seeing a lot of noise. Everybody's so excited about this guy who put in a $1.6 million call in April at a $35 strike in Cameco. It's like, look, having money doesn't mean you're intelligent. Okay, just because somebody went out and did that doesn't mean it's going to go up. I mean, this guy may very well have just smoked $1.5 million. Okay, so I understand while it excites people, it's not a reason for me to buy, right? I'm not chasing other people's decisions. I'm chasing fundamentals, and I'm letting the charts tell me when to buy and sell based on momentum and being oversold, overbought. When something's a really, really good deal and something starts getting expensive. And so we are fundamentally extremely bullish in this entire sector. But I don't really care if some dummy spent $1.5 million on a call option, right? I mean, I just feel like we're getting a bit overextended. I feel like we're kind of due for a break. I may end up eating my words, right? This thing may go straight up here. It's totally possible. But my gut tells me that this guy might lose some money. I'm just saying. So me personally, I'm waiting on a pullback to add. I'm not chasing anything here. If you're not in yet, go back to what I said at the original, start of the video, because I have a feeling you have time for consolidation. There's no reason to FOMO. Sure, the price difference between here and here, you may not care about it in 2 years if you're willing to be an investor for that long, right? But certainly in the short term, if you buy here and it goes down here, it's going to suck. So depending on your time frame and what your goals are, I mean, if you want the best price, then probably hold on, right? Because if this actually breaks out on volume, you can chase it anyway, right? So there's no reason to FOMO if you're looking to add or get your feet wet with your first entry. Just watch one of those two things. Either come down here for the retest and buy there, strong buy, or if you get a breakout with big volume, feel free to chase. Now, just like what we talked about, all of these commodity stocks are trading in synchronicity with each other. In fact, they all look real similar, right? They all look super similar. Even the spot price of uranium looks similar. Okay, they're all making the same consolidation patterns. They're basically putting on flags or pennants of their own kind on the end of these long flagpoles. Okay, and so you're really setting up the same way no matter what it is you're interested in. And remember, it doesn't matter what you're trading. If you're in the commodity space, there's confluence across the board. These things are all starting to trade in synchronicity. They're all really putting a handle on the end of what's really a cup in several things, but really they're just consolidating and they're getting ready. They're setting up for that next jump up, and they're probably all going to do it together. I mean, there's a lot of big news. There's a lot of speculation that commodities are going to be the next currency, right? Because basically what's happening right now in the world, guys, is big stuff. We have literal paradigm shifts taking place. I mean, you got guys like L. Arian. I mean, he's talking about, look, he's calling the Fed's bluff, right? You understand how big of a deal it is that the Fed is getting noticed for failing, how the Fed is getting noticed for blatantly lying and missing what was so obvious to everyone? I mean, everybody who had even the slightest clue of how money and math and markets work knew that this wasn't ever going to be transitory, right? Inflation has been coming for a while. That was predictable. And it was going to get worse. That was always predictable. And here we are in this situation that was not only predictable but avoidable, and the consequences, therefore, are predictable too. And the Fed is screwed. It doesn't matter what they do. They can either raise rates to a meaningful level and crash the economy in order to save the dollar and default on our debts and just go through this whole crisis, right? He can go full Volcker, right? And he could do that to restore credibility to the bank, all right? Or he could kick the can down the road, make these 25 basis points, 50 basis points hikes until the market really starts rolling over and calling his bluff, and then go back to zero, even go negative, right? Just to keep kicking that can down the road for that cheap money. So all these fat Wall Street cats get even fatter. So he has a choice to make, and it doesn't matter what the Fed decides to do. You have to understand this. And this is not an opinion. This is mathematics. We're at a crossroads. It's a fork in the road. One way is inflation, right? It's really, really bad. And the other way is a depression. It's also bad. Now, there are pros and cons to each of these ways, but both of them lead to disaster. And so a crisis is all but certain. It's just a matter of which type of crisis we're going to get. And that's up to this man, right? So just keep paying attention to this stuff because these things are all developing quickly. And I bring this up because the world is changing. People are recognizing that the United States doesn't produce anything, guys. We don't produce anything at all other than dollars. Okay, that's all we do. We import everything and we buy it by exporting dollars, right? We print them out of thin air and buy things that other people actually produce. And people are starting to realize that they're raping their natural resources in their native countries, right? Whether it's oil or gas or minerals and whatever it is, and they're giving them away for these monopoly dollars. So there's a paradigm shift that's coming. And all I'm trying to say is just be aware of this stuff because commodities haven't even started yet. I mean, look, even in IPI, we're getting the same pattern. I'm telling you guys, all this confluence across the board, I mean, it's just screaming out to you. It's telling you what's coming. I think we've had a nice run. It's still bullish. We have a long way to go. But, you've got people who are only, they only ever want to be in this stuff for a week, right? They just want to make that quick run on the news, right? And they're just day traders. They're going to take their profits when you get big run-ups. And that's okay because that means if as an investor, you get an opportunity to buy more at a lower price, all right? And you get time to go to work and get paid to get more money for when that time comes. You can take advantage of it. So don't worry about this stuff. These are good things. This is very, very healthy. And it's extraordinarily bullish to see this confluence across the board and all these commodities together. So again, if you miss the ride on Intrepid Potash, it's still bullish. Like this thing probably has a long way to go too. Here's my next price target. I actually started putting price targets on things so we could talk about together. This is the next price target I have for the next potential sell zone, okay? Next potential buy zone will be anywhere down here, right? So start charting it yourself and start keeping track of this stuff. We have the 50 right here at $57. It looks just like Sprott Uranium. Go figure. So we get down to this trend line on the bottom. I'm buying. You understand? I'm buying. It's a strong buy. It's bullish, and that's support. In fact, it might be a double confluence of support. It might roll over, right? It might and hit right here just as this is coming right here. I mean, that's a strong buy, guys. So just pay attention to this stuff because if you missed out, there's plenty of time. But understand, you are running out of time. These things are gearing up to explode. Look at oil. What does oil look like? I mean, it's the same stuff. Right? Broke up, came down to the 50, right? And now it's got its own little wedge it's dealing with. I mean, this stuff is just across the board. Look, we haven't even talked about the gold oil ratio yet. I mean, look at this. It came down to this historical resistance. We broke the trend, and where did it reverse? Hard, right here. Right? Right here. It's actually a little low. Sometimes if you don't lock them, they'll move on you. Came just a bit below peekaboo, and boom, strong reversal up to the 50, automatically turned around there. I'm willing to bet we get a double bottom. Okay, I am so willing to bet that we get a double bottom on this thing, and we come back up here to about the 25 zone. I would bet that for sure. We're going to keep an eye on that and see if it happens, but What this is really telling you, wow, it's telling you a lot. That user error, I stopped recording and didn't even realize it, so I got to do this again. What this is really telling you guys is that what kind of crisis we're going to have. I mean, the higher this goes, obviously, the more expensive money is, which is to say gold. Okay, and the lower it goes, the more expensive energy is. So what type of crisis are we going to get? Well, if we do have some kind of, let's say the Fed continues being really hawkish and they really, really do raise rates and they really do go all out to stop inflation. Let's say Powell goes full Volcker and invokes his inner 1970s and raises interest rates to 10, 15%. Well, obviously, the economy is going to come to a grinding halt, right? So what would you expect oil to do? Well, I would expect it to plummet. And therefore, this would skyrocket. This ratio would skyrocket. So I've talked about Northern Dynasty before, and I'm going to bring it up one more time because I think it's worth a lotto ticket. And the reason why is because if you don't know anything about this company, they're sitting on about $60 billion worth of gold, copper, and rare earth minerals, okay? And the reason why they're only valued at $222 million is that they can't mine this stuff, okay? The government won't give them permits. In Alaska, they're dealing with a bunch of stuff. They're going to mess up the environment. And it's been going on for years, like a decade, okay? And just slowly over time, this fortune is just being dwindled to nothing because people are giving up on it, right? I mean, why invest in this company if the legal challenges are always lost and you can never get in there and get this stuff? Well, if you look at what's going on in the world with these commodity wars that are taking place, it is inevitable that we're going to get in here and unlock this stuff because we're going to need that copper and we're going to need these minerals. We're going to need these rare earths and we're going to want that gold. Okay. So you can see what happened to the price last time. This is where gold peaked in 2020. Okay. And it shot up 600% with that run. Okay. After the pandemic started and the March crash, this is how much it rebounded. And I just want you to know that even if this company never opens, it's worth a lotto ticket, all right? Because when gold breaks out soon, and it's going to, this is absolutely going to skyrocket with it because all of those resources in the ground that they won't let us into are just going to get more and more valuable, which just makes the lottery ticket that much more valuable too. So I think it's it's a lotto ticket. At your own discretion, I'm in.